Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, December the 4th, the year 2019. Let's talk trading. Skin in the game. I was talking with one of my new trading buddies over there in Sweden. Shout out to you. And he started talking about a demo, and I said, hey, don't even talk to me about demo. You got to have skin in the game, at least a dime a pip or 9 cents a pip, depending on what you're trading, or 7 cents a pip. Because if you don't have skin in the game, you're not trading. That's like learning how to swim without getting wet. Nuh-uh, you got to get in the water. You can't, you can do all the Wii baseball or Wii tennis you want, but until you get out there on the court with the real racket in your hand and hitting a real ball against a real opponent, you ain't playing. It's just that simple. So you got to get skin in the game. Um, and while we were trading, I noticed that the British pound took off, and the only reason I noticed the British pound because I ran those frequency distributions, and I'll show them to you in a bit on the pound, on the range, and the high minus the close, and the close minus the low. About the rat trades. So anyway, but you guys all know, no matter what you're trading, you got skin in the game, then you've got to make sure you've got your risk and money management in place. In fact, he was asking me about, the trades. When would I add to it? When would I take off from it? And I said, it all depends. Most of the questions he asked, my answer is it depends. I mean, you have to trade in the moment. Um, as soon as I got up 6 pips, I stuck on a 5 pip trailer. Normally sometimes you move the stop up to break even plus one, but I just know with the pound and the way it was moving, hey, the 5 pip trailer is probably going to do a better job of keeping me in the trade rather than me, jumping out at every little price action I see on the 1 minute chart. But you got to remember something, fellow traders. Number one, don't lose any more than you're willing to lose on any particular trade. And number two, these videos are for educational purposes only. And your results may differ from mine. And always remember and never forget that trading is very, very, very risky. You can lose your money. So if you need financial advice, guidance, seek it from an accredited financial professional. That way, when you lose your money, you know you got your advice from an accredited financial professional rather than somebody you heard on a YouTube video or off the internet. Okay, we got the disclaimers out the way. And here's dollar yen. My normal trade here, you can see how it vacillated across the open and moved up. It did hit the pivot. Even though it's not shown on this chart, I knew it hit the pivot because that's what I was targeting for on that particular trade. Also, let's see, what did I want to tell you? Oh yeah, let's bring up the pound dollar since I've been talking about it. You can see here it broke out of the previous day's high, and what it didn't do, it didn't hit the pivot. And that's what I was kind of gaming on, but it didn't. And then of course it reversed, and you can see where it is right now. Let's just run through a few things here on the weekly. 1, 2, 3, 4, 5, 6 pairs still haven't filled, so there's still time for that trade to happen. And you can see here off the week, 41 pips off the low, 88 pips off the high, in and out of that lower wick zone today. Or was that yesterday? You can see here, actually it looks like it was today here, right here. There's that. And off today's low, 42 pips, off the high just 4, and we're 22 pips to the green. So we got a green day, but the year, month, and week are red, 80 pips below the yearly open. And right here, Yesterday, we broke out of the range of the first trading day of the year, and today we've entered back into it. But here's the first trading day of the week at 108.92. That's the low. We still haven't gotten back to that level. And you can see here what we've done across the opens and across the ranges. Skip through those. Now, once again, I think I told you this yesterday. We almost hit that inside bar here in the monthly. Those of you trading inside bar, if you were long at 47, you're up 38 pips right now. So once again, inside bars trades are proving to be profitable. And on the day, you can see here we've got dollar Canadian coming in at 100, all the pound pairs in at 100, and a couple of the euro pairs in at 100. So I guess you can consider this a pound pair, the euro GBP, but it's not in at 100. So I guess you could say I stand corrected. But where we have the, the pound here, they're all, a couple of them close to 200. And as we speak, you can see that the pound is, as I speak, the pound's dropping, and we'll pick that up in a little bit. Highest open trade right here. In fact, that was one of the calls I made on the pound right here at 3109. When I got short, unfortunately, I was waiting to get short, and the next thing I know, it dropped like 2 pips in the blink of an eye. I mean, I couldn't. The 1 minute chart, it opened. The next minute, it just dropped 2 pips. There's no way I could enter the trade, so I got in late, took a little heat, but it paid off, I think, 13 pips using the trailing stop. And in fact, it gave me an idea since I was on WhatsApp, and I don't know, but I think it might be possible. Maybe I could do the old 2% club, do it on WhatsApp, because the trader was asking me why I don't do it. It's because I don't have the bandwidth. I live out here in the ranch in the country, and we don't have high-speed internet out here. Cable's 2-second delay, so that's no good. All we have is cellular, so that's what I have to use, basically a cell phone. I have a little MiFi device to get my internet, it works pretty good. But as far as bandwidth, I just don't have the bandwidth to run the chat room and have, like I used to have, 5 computers, online. Just don't have that capability. And I probably just missed an entry on the pound. I was looking to go short at around 30.95. And the reason why 30.95 was because it was the H4, highest open on the H4 right there, and exiting out of that wick zone. So that's what I was looking to do. Let's see, before I run out of time, let me go over to those other charts that we had mentioned. Now, the pound, I was shorting it because if I have to hold it, it's going to pay me instead of the other way around. And I've discussed that with you guys before. Okay, we've already seen, let's see, somehow these got all switched over to the yen. Let's go over to the pound. So the frequency distribution of the range here, you can see 35% of the time it's 100 or more, and today's current range is 137. So that's where we are in that area. Okay. Now, high minus close and close minus low. This is the rat zone. And you can see here, so 21% of the time, it is less than 20 pips. So if 79% of the time, it's greater than 20 pips, high minus close. And close minus low, you can see here 29% of the time because you just add up these two, it's 19 or less. So 71% of the time. So in both cases, 70% of the time or better, you're going to have price not closing in the rat zone. So that's why we're looking to take that trade here in the rat zone. So we had some rat zone trades there. You can see prices outside the rat zone as we speak. So that's how you analyze those pairs, and you pick the ones that work best. Because if we go back to this chart and we look at dollar yen, you can see here out of the last 100 days, we had 45 worth less than 20. So 55% was greater, the high minus the close. And here we have 43% was less than, or 57% was above. So you see the pound 70 versus 50%, that's all the world of difference. I mean, so it's a no-brainer which pair you trade using the rat zone method. I mean, you can look at some of the others here, and you can see here where you just don't have the you just don't have that distance. Now, that trader over in Sweden also alerted me that I knew there was dollar Canadian news, but he said, "Hey, would you take a look at Euro CAD?" And it dropped like a rock. And we were looking at the daily, the H1 chart at the time, and it was here. It's just like boom. So let that baby settle out, and then maybe you might want to trade long. Problem is, if you trade long Euro CAD and you hold it over the end of the day, you're going to pay a hefty fine or interest. So I would avoid that, holding it. So that's only for scalping. So let's see, where do we leave off here? Pivot, we took out the pivot here. And I mentioned the pound was very naughty and didn't take out the pivot there. Okay, what else do we have? Just showing the pivots here, waiting for a tick. Waiting for a tick. I guess they're at lunch. Nobody wants to trade the yen at the moment. There we go. There's our tick. And so you can see we took out the pivot and then we took it out again. Pivot, pivot. Price action on the pound. There was that 3-ball. Just taking that trade short here. Looking to go short again, but you can see it's starting to put up some fight, buyers and the sellers. I want to see it drop and then drop again, all the way back down to the $1.30 area. Wick zone, in and out right there, back in, out. Money to be made. Crossing the lines, same thing, money to be made. At the tick level, you can see here we've dropped about 3 pips. Einstein line, not giving up much at the time. Wick zone, right out of that wick zone. That was the dollar yen. The pound dollar, you can see what it's doing. It's in what I call rare air, because if you go to the month chart, you can see here 1, 2, 3, 4, 5, 6, 7 months to get back to that level. And you can see here it hit the yen hit the ATR on the week and reversed out of it. And you can see at the day we're at the 50% of the weekly open and the daily open. So that's it, fellow traders. Just remember, skin in the game, because it's not what you trade, it's how you trade it. Go out there and drain the banks.